Hey there, David Pereira here from Rent or Grow Homes, bringing another deal for an investor, another rent-to-own deal in Cornwall, Ontario. So we're going through the numbers in a second, but to give you the background on this family, I actually spoke to Dee and Chris over a year ago. And back then, they just weren't ready. They just needed more time to save up for a bigger down payment. Back then, their savings were less than 2,000, and they had some debt that they had to clear. So in the last 14 months, they've done exactly what I asked them to do. Um, their savings now are right around the 10,000 mark, which is enough to get started in our rent-to-own program. They've improved their credit scores. They've paid down a ton of debt. They've been working a lot of hours, really focused on a goal of home ownership. So it's always nice to talk to someone who sort of takes your advice to heart and actions it. They've done that, and so I'm happy to back them, happy to work with them to help them achieve home ownership. So let's go through the numbers of their deals. So based on their combined salary of over 110,000 plus childcare benefits, CCB, we've approved them for a purchase price today of 350,000, with the idea that the market will go up 5% per year in Cornwall, and that's our usual assumption, and it's an assumption that's served us well. It's conservative for the Cornwall market, and with a buyback price in 3 years of 405,000. So the investor is buying today at 350, and Dee and Chris buy back at 405 in 3 years. So today, the investor is going to get a normal mortgage from from an A lender, kind of your regular bank, 20% down. So the other 80%, we get financing from the bank. Right now, 3-year fixed rates are around 4.5 or so. So we use that in our calculations. In terms of legal closing costs, typically around 3,000. The investor pays for the appraisal. The tenant buyer pays for the inspection. There's land transfer tax, of course. I charge a fee up front of 3,000. The tenant buyer has some skin in the game, so they're in for 10,000, which means the total investment from the investor, when you sort of add all these components up, is 70,325, and that's the number I use to calculate the ROI on. So it's literally how much money is the investor putting in, and then we calculate the ROI on that number. So the rent for this family is going to be about $2,200 per month. Each month, they're going to save an extra amount called the kind of the option credit or savings credit. So this multiplied by 36 months plus their original $10,000 deposit is what they're going to use for their future down payment. So each month we have the rent coming in on the 1st of the month. We have the option credit coming in on the 15th of the month for a total of $2,700 coming in each month. In terms of what's going out, assuming a 30-year amortization on a 3-year fixed mortgage at 4.5%, the number is $1,419. Insurance is anywhere between $150 and $200, and property taxes I'm estimating $210 right now. $1,829 is the total going out, which leaves us $871 in cash flow. So I would make a distribution to the investor every month of $500. Literally, I would do an e-transfer on the 6th of the month, which is when I pay out my investors. And on the 6th of the month, you basically get $500 in cash flow. There's $150 of property management fee, which I charge each month, and we'll leave the remainder $221 in our joint account. Now we fast forward 3 years. So we've already agreed on the sale price of $405,000. We basically give credit for the original $10K as well as the accumulated option credit of $18,000. There's mortgage discharge. We have a legal closing cost at the end. We return the money back to the investor of $70,000. This is the initial investment. So this is the proceeds from the deal at sale time. Now let's look at our overall profit. So our overall profit, like any real estate investment, there's 3 components on how we make profit. Number 1 is the appreciation, which is the gap between what we bought today and what we sold. So the difference between 350 and 405 is the 55K. Over the 3 years, they paid down $14,000 of our mortgage, and then there was rental cash flow each month of $13,366. We add these 3 up, we get $82,000. Subtract the legal on the front end, on the back end, as well as the land transfer tax we had on the front end, and then I had to pay a referral fee for this tenant buyer that came in. So the total profit available on this deal is $71,000. Now, the investor was in for $70,325. That was that number from earlier when we calculated sort of all the different costs up front. That was the number they were in for. On this deal, I'm able to give the investor 23% annualized. So if it's a 3-year deal, we multiply the 23 by 3 to get 69%. And then to figure out the total profit to the investor, we just multiply the 69 by the 70,000 to get a number of 48,524. Now, some of that money, some of that profit's coming to you as cash flow, because every month I sent you $500 for 36 months. 500 times 36 is 18,000, which means you get the remainder 30,524 in profit at closing. Now, in terms of how I make money, up front I charge 3,000. Each month I charge 150 for 36 months. And then at the end, I kind of get what's left over once you've been paid to make, the investor's been paid to make them whole. So for me, most of my profit comes at the sale. So that means we're all sort of incented to get to the finish line. And when we look at the overall profit on the deal, there was a total profit, the total pie was 71,000. The investor is getting 48, I'm getting 23. And so the breakdown is really kind of 67.6 to the investor, 32.4 for me. And this is what I try and always sort of navigate, is how do I give my investor 2/3 of the profit while I keep 1/3. So you can see sort of the summary of the deal here on the right side. So 350, 405, these are the two main prices. 3-year term, investor in for 70,000, monthly cash flow of $500, which is an 8.5% cash on cash return. 23% annualized ROI is our target. And I say targeted, but really once we do the deal, the numbers are kind of locked in. Nothing really changes at all. We don't increase the rent, the mortgage is fixed. All of our expenses are generally fixed. So even though I do say targeted or estimated, I cannot say guaranteed. It does not stray very far at all from these numbers. And the total profit, of course, the most important number, is 48,000 back to the investor. So if this is the kind of deal that you'd be interested in, it's 100% passive. Basically, my team and I manage the tenant buyers. We're the ones visiting the property. I've got an inspector. I've got a credit counselor. So it really is something that an investor doesn't have to deal with on a day-to-day basis. Literally, all you're going to get once everything is set up and the tenant buyer is moved in, all you need to do is basically accept the e-transfer on the 6th of the month to cover the expenses as well as your extra cash flow. So if this is something that could be interesting to you, please reach out. You can email me at info@renttogrowhomes.com. Go to our website, renttogrowhomes.com, or send me a text. I'm very accessible and we'll be happy to talk to you. Take care.